Does it really enhance transmissibility as has been suggested? Does it really prevent antibodies from binding? These are still questions that scientists are hopefully going to answer in the coming weeks.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
They potentially could start making their own cars later in the decade, but that's more the core DNA of Cook and Cupertino in terms of going after this massive market opportunity. And I view a partnership with the likes of a Tesla, a VW, is likely the first step as they go after EV.
And that is Dan Ives of Wedbush Securities, analyst who covers the auto market and tech market, and talking specifically about Apple getting into the EV market, which I think really has been one of the more fascinating, more recently business headlines, Matt, that we've talked about. And I wonder, we're talking with Mark Kaufman. I do wonder if they would partner up with Apple. Maybe that's something we can ask him.
Yeah, well, I know that, when I was covering Ford more closely, I know that Bill Ford and Mark Fields at the time had invested a lot of money in, I think, an R&D facility out in Silicon Valley. I went out there and toured it. It was pretty amazing. I also saw one of the original GT40s in the Gulf livery, which I wish I should have prepared a picture, some video of that, because it was amazing. And they've been doing so much at Ford ever since, Bill Ford was convinced by the Sierra Club, I think the legend goes, to start doing better for the environment. And that's when he got rid of the big excursions that I loved and started getting more into the kind of EcoBoost engines. And now they're going, of course, for the full EVs. Mark Kaufman is still with us, Ford Motor Global Electrification Director. And Mark, I want to hear about some of the products. As you can tell, I'm very close to the Ford family. I've spent a lot of time with your
보청기는 절대 미루시면 안 돼요.
Is a very close personal friend of mine, and I wonder what's next. You've got the Mach-E, and the environment, and that's when he got rid of the big excursions that I loved and started getting more into the kind of EcoBoost engines, and now they're going, of course, for the full EVs. Mark Kaufman is still with us, Ford Motor Global Electrification Director. And Mark, I want to hear about some of the products. As you can tell, I'm very close to the Ford family. I've spent a lot of time with your boss. Alan Mullally is a very close personal friend of mine, and I wonder what's next. You've got the Mach-E, and you've got this partnership with Volkswagen. What else can you come out with that's going to blow our minds?
Well, first, coming late summer in 21, we've got the Mustang Mach-E GT. So that is the performance version of that product. So we're super enthusiastic about that. You've just got fantastic 480 horsepower, 634 foot-pounds of instant torque in that EV. So that's going to delight customers in that space. But even more importantly, with 35 years of commercial vehicle leadership, we've got a Transit full battery electric vehicle van coming out. And that comes in lots of configurations to meet a wide breadth of consumer needs. And that's also in 21. In late 22, we're tapping into probably our most iconic nameplate with an F-150 full battery electric vehicle launching.
And a lot of people know the F-150 is probably my favorite vehicle of all time. I had the 6.2-liter Raptor version, which was amazing. I love torque. If you could deliver it to me with a battery, I honestly don't care if it comes from internal combustion or electric. It sounds like it would work great in a Transit as well, which is an amazing product. What about your partnership with Volkswagen, though? We talked a little bit about it in the past block, and I'm wondering, can you envision another model? Can you envision deepening that partnership? Because it's such an exciting transatlantic joint venture.
Yeah, Matt, Ford continues to be open to strategic partnerships where they make good sense. And clearly, that first relationship with VW is a start. We also have equity interest in Rivian. So we've shown that where it makes sense for Ford, we're certainly going to be open to those partnerships.
Hey, Mark, I just want to follow up on what you said about the Mach-E, and I do wonder if you guys are going to allocate more to Europe next year to meet and comply with some of the tougher COT standards. And I'd love to also get your thoughts about EV in Europe. Is it a breakthrough year next year?
Yeah, and let's start with I mentioned the growth in Europe this year, especially in markets. You've got your big three core markets between Germany, UK, and France that have really accelerated this year. So when we start thinking about that technology adoption curve, there's usually a break point from 2.5% is usually where you start moving into early adopters. And as we're finishing up 2021, all three of those markets now have tipped up to about 5% EV share of industry. So we're going to expect continued growth in those markets.
Does that mean allocating more Mach-E's?
We're always looking to get product to customers, and obviously having demand for those products in pull is going to be fantastic for us.
So one thing I want to ask you too, and going back to Tesla for a moment, because they really, like I said, I think everyone would agree that they really shook up the EV market. But I do wonder, some of the problems that they've had, quality issues, does that provide openings, do you think, for some of the established auto players?
I don't think, for anyone who's coming new into the auto space, I think you shouldn't underestimate essentially the value of a good distribution network and the ability to take care of customers. So just maybe to give you some quick U.S. numbers, we have 2,100 EV certified dealers in the U.S., and we have 10,000 trained service technicians who are capable of dropping batteries off of cars. Unfortunately, accidents happen within the world. And, for the ability to get cars into our service bays at Ford and back out, we think is going to be a continued advantage for us.
Yeah, I wonder about service bays. I mean, how necessary will they be when you have electric cars? I assume if you do a better job than some rivals at quality, you're going to need fewer repairs. You're also going to need actually fewer people to build them, right? Is it just going to be a less people-intensive business car making?
Yeah, it gives us, I think, a little bit of room to have more what we would call top hats or more product configurations off of a platform in a plant. So the line length for an electric vehicle is about 30% shorter than a traditional line. So it is a little bit more efficient. So in a case where before we might have, just one product at a plant, we might be able to get two products in off of the same platform. So there are some efficiencies that we'll have. And while service patterns certainly change with that, we still think there's going to be good ongoing throughput. As I said, unfortunately, accidents do happen. So getting customers in and out quickly is going to be important for us.
All right, really fun discussion. Matt's all in on cars, but I just want, for the record, Mark, I also am into torque. I'm just going to put it out there, okay? Mark, thank you so much. Have a great new year. We look forward to talking to you next year. Mark Kaufman, he's Global Electrification Director over at Ford Motor. Yeah, Matt, I mean, I just think what's going on in the auto industry is fascinating, and I'll be curious to see what happens in 2021. We didn't really get to explore China too much, but it is a huge domestic market, and they are developing their own domestic players, and I don't know what that means for the rest of the world.
Well, I know, look, his boss, Dr. James D. Farley Jr., spent a lot of time over here, spent some time in Asia. He has so much experience globally, and he is such a car fanatic that you can be sure Ford is exploring, as Mark Kaufman just told us, all of the possibilities and partnerships that they can. So it'll be exciting to see what they can do.
Don't you feel like it's all about partnerships? It's just like the technology world, right? You have these strange bedfellows, and you're increasingly seeing that certainly within the auto industry, but it makes sense.
For sure. And you know what?
What?
Sergio Marchionne used to say this a lot, and people thought he was kind of crazy. But now, post Sergio Marchionne's death, a lot of people are saying he was right. They really need to get together and combine their resources.
He definitely liked you, too. Michael Herson is coming up, Eurasia Group Director of China. We're going to talk about that Alibaba news. Jack Ma, we've got to get into it. That's coming up on Bloomberg Surveillance, and this is Bloomberg.
manage your debt. Things they didn't teach you in school, part 4. When we think of debt, we often automatically think of a horror film. But debt doesn't have to be the scariest thing in the world. If you found yourself with some debt that's stressing you out, here's how you can manage it. First, prioritize your payments and pay down the debts that are costing you the most. How do you find that out? Look at your interest rates on your monthly billing statement. If your credit card has a really high interest rate, you'll want to pay that off before paying off something like a student loan, which might have a low interest rate. The average interest rate on a credit card is 14.5%, so you're getting a good return on your money when you pay that debt off. Next, track your spending. Stick to a budget so you can know where you stand financially and start to save some money to pay your debts down. You can do this with apps like Digit, Acorns, and Stash. And lastly, breathe. Know that every financial mistake is fixable. You can always recover down the road, but it's best to get ahead of any mistakes that could lower your credit score. And a good credit score can save you a lot of money, earning you a lower interest rate in the future.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
And a very good morning, everyone. This is Bloomberg Surveillance live on Bloomberg Radio and Bloomberg TV. I'm Carol Master at Bloomberg headquarters in New York, along with Matt Miller. He is in Berlin. Quick check on the market trade, because we are seeing certainly optimism around the globe. We saw records being taken out once again on those major U.S. equity averages yesterday. Some support once again on this Tuesday, just up about 0.4% on S&P futures, and we're just 1 hour away from that open. 10-year note, let's draw some attention to that, 0.94. There a little bit of movement, though, and some support continuing in New York crude markets. And Matt's been really pointing out when it came to the European trade, we did see a rally over in the UK markets, that after that long holiday week. And of course, London markets were closed yesterday because of the Boxing Day holiday, Matt. So getting a chance to react to the Brexit news.
No one's explained to us yet what Boxing Day actually is. I know it's the day after Christmas.
Didn't you read Bridget Jones and see it in the movie? It's when you wear funny sweaters, isn't it?
No.
That's all I know.
Is it? I mean, it's nothing to do with the sport of boxing, right? And it's not like boxing presents. I don't really get it. But
London, could you call us right now and explain Boxing Day to us? Because we're having some problems here.
I should know. In any case, the rally there is remarkable. The FTSE is gaining by the most that we've seen it since November 9th. So it's been, seven weeks since we've seen this kind of rally on the FTSE. And it's interesting because it means investors, either they like this deal a lot, or investors were worried that there would be no deal and they're just liking it better than the no deal that we had. Let's get over to Michael Herson right now from Eurasia Group. He's the China director there, and we have a lot to talk about in terms of trade deals with you, Michael. Mainly the idea that Europe and China could trade closer has been one that has been pushed certainly out of Brussels for some time. And now it looks like we have more solid details that relationship is going to get deeper. Can you tell us about it?
Sure. Well, it looks right now like the EU and China are going to sign a bilateral investment treaty, or at least will finalize the deal in coming days. Now, there's still some potential complications. There are some quarters in Europe that are not happy about this deal. It's going to have to pass the European Parliament, but it looks like they're going to get the deal done. And I think you have to count this for now as a win for Beijing, which really wanted to squeeze this deal in before Joe Biden takes office and before the U.S. and EU form a common front against China on a variety of issues.
Listen,
now that,
Michael, this seems like a pretty big deal. I mean, they've been doing and trying to get this together for some time, but I do think it, essentially will cement a relationship and kind of push the U.S. As Joe Biden comes into the White House, kind of push the U.S. to the side.
I think it's going to be an initial challenge for the Biden administration to be clear. And look, Europe is not going to align completely with the U.S. when it comes to China. It's too big of a market and too important. But, at the same time, Europe has really changed its tone with China. We need to also look past this deal. There is a growing sense from Europe that China is a strategic competitor. Europe has many of the same concerns as the U.S. on values issues like Hong Kong, Taiwan, and China's treatment of the Uyghurs. So I think there's going to be some potential for Biden to work with Europe on a variety of issues. This deal shows it's not going to be a layup by any means.
Well, and it's interesting. Well, what do you think will be ultimately some of the implications? Let's be specific. Let's drill down. What does it mean? What is potentially the U.S. maybe squeezed out of? What does it mean in terms of opportunities for China and Europe specifically?
Well, I think in terms of market access, European firms are going to have a bit of an advantage, and that's going to come in areas from financial services to autos to a variety of other areas, especially as the U.S.-China relationship is only going to get, I would say, very moderately better under Biden. So I think for market access, if you're thinking about European firms for whom China is a large market, this is an advantage over the U.S., but this is an investment treaty. It's not a bilateral trade agreement. It's not it's not a blockbuster deal. It's a big deal, yes, but I think it means market access for European firms in China.
Does the Brexit deal or does the sort of UK behavior also take out another competitor? I mean, is Europe able to create this bridge to Asia and get a leg up on not only the US but also the UK in terms of trade?
I think to some extent it's going to be interesting to see what the UK does with China now, because a UK without Europe means that China is that much more important. But in the UK, you see the same kind of pushback against China that you've seen in the US, in Australia, and a number of other quarters. So I think it's going to be challenging for the UK in terms of financial services companies to really look to have the city and London play a larger role as an offshore financial center for China. I think that's going to be a political challenge now.
Hey, Michael, one thing I've got to ask you about, and we didn't really cover it too much yesterday, but we've all been following it closely, is what's going on with Alibaba and Jack Ma specifically. And the headline today is that Ma is planning with Ant Financial to fold its financial operations into a holding company. Basically, it's about appeasing Chinese regulators. They were too concerned about how powerful and how big, especially when it came to the financial sector, that Jack Ma and Ant Financial was getting. What does this say about Chinese companies specifically in China? Is there a bigger, broader message? Because we did see some of those Chinese tech companies sell off yesterday, rallied a little bit today. What's the message here?
I think the message, very simply, is that if you are a private company in China, you need to stay within the lines. Some of those lines are political, and Jack Ma had criticized China's regulators, which I think turned the heat up on him. But it's also about market power. For Beijing, private companies exist for a reason, and that is really to serve the broader interests in China. They need to be good corporate citizens, and that means not abusing market power and not playing fast and loose with financial regulatory rules. So I think for the very large Chinese fintech players and large Chinese e-commerce platforms, you need to incorporate that political risk. If there is a sense that they are moving too far, too fast, that they're too powerful, I think Beijing is clearly now going to cut them down to size.
Yeah, certainly, and moved quickly. Hey, listen, we're going to leave it there. Michael, thank you so much. Appreciate your time. Michael Herson, he's Director of China over at the Eurasia Group, joining us on this Tuesday. I do want to mention a few headlines crossing the Bloomberg, and this is coming from President-elect Joe Biden. He is expected to say later on, to make some remarks, if you will, later on from Wilmington, Delaware, to say that the Trump administration vaccination pace is lagging. He's also expected to say COVID infection rates are seen increasing. So to make some official statements. You know, what's interesting, Matt, is for a long time, certainly after the election, President Biden, President-elect Biden, I should say, was very careful in terms of commenting on the vaccine progress, on the virus, but he's definitely coming out at this point because I think as we get closer to him taking over, concerned about the transition and making sure it's smoothly, especially as we see these numbers growing.
Yeah, he's going to want to hit the ground running,
Totally.
Certainly. And I think this is something that you're seeing now from many other countries as well. So Germany has plans to get the vaccine out faster. France and the UK are trying to do it as well. John Lauerman, Bloomberg News health editor, joins us to talk a little bit more about this. And John, is this partially, are we going to see countries try and make grabs for the resources that are out there? Is this going to start to get really competitive?
Well, good morning. Yeah, we may see some of that. I mean, we've already seen that, right? That's been going on for a while. The U.S. And Canada, really, the UK as well. Those have been the countries, the wealthiest countries have been the ones to reach out and grab the vaccine as quickly as possible. I think the interesting thing that you're seeing right now is that the rollout probably isn't going as well as had been anticipated. Part of that may have to do just with the mechanism of the rollout itself. In other words, that there's some growing pains. Part of it may have to do with demand. It just isn't clear yet exactly what's happening on the ground, why the vaccine isn't rolling out, at least here in the U.S., I think in other countries as well, quite as quickly as we had anticipated. I mean, a few months ago, or a few weeks ago even, we were talking about 20 million doses by the end of the year. It seems pretty clear that that's not going to happen, and this is a good opportunity to plug a feature that we have in the Bloomberg that some of my colleagues have been working on, which tracks the number of doses that have actually been administered worldwide, and that's just over 4 million so far as of December 28th.
Well, John, this is so interesting because one of the things that kind of caught my attention too is that we are seeing European governments talking about planning to track the number of people getting vaccines to help chart a path out of the crisis. Germany is considering some legislation to ensure that unvaccinated people are treated fairly. I mean, what they're thinking about, we talk about, testing and tracing, but now we're moving to another stage when it comes to who got the vaccine and kind of tracking them as well. And I think about where Joe Biden's coming out, he's concerned about the transition. It's not necessarily going as smoothly, and how crucial all of this is getting to a point where come summer, we can kind of move back towards a more normal society. Are we going to have to do this kind of tracing when it comes to the vaccine in order for the world to start reopening?
Well, maybe before we get to that, we got to start thinking about confidence in the vaccines.
Yeah.
This is something that has been an issue for a while now. Obviously, there's been, concern about vaccines among certain quarters of population. Throughout the process of developing the vaccines, I think health officials have tried to bolster confidence. The name Operation Warp Speed, for example, there was concern that name might imply that corners were being cut in the vaccine. We've seen some very rare reactions to the new vaccines,
right,
that have raised some concerns. So I think what we have to do is, I think Dr. Fauci is trying to do, keep on reinforcing the safety of the vaccine, and then try to make sure that people are confident enough to take the vaccine. And then, of course, we have to get the supplies out there as well. That's another issue too.
None of it's easy, Matt. That's for sure.
Actually, another cool thing is, John, you worked on a story with Scott Squires and Jake Rudnitsky about Argentina kicking off the vaccination drive with Russia's Sputnik 5. And I think it's interesting. We focus, of course, on the Western vaccines in the Western countries, but it's interesting that there are other efforts going on. This is a global issue. So I'm glad to have run across that story on the Bloomberg today. John Lauerman there covers healthcare for us here at Bloomberg. Thanks so much for joining us. Carol?
Yeah, and there you can see that headline that President-elect Joe Biden expected to give a plan to boost those vaccines. So we're going to get some more specifics. All right, folks, coming up, Bloomberg Television and Radio. Just keep in mind that later on we're going to hear from Adam Posen over at the Peterson Institute, see what he has to say, certainly about what's been going on, some of those big headlines, virus and other, and the economic impact. You are watching and listening to Bloomberg Surveillance. Carol Master, Matt Miller, and this is Bloomberg.
With the First Word News, I'm Ritika Gupta. The House is now daring the Senate to follow in its footsteps on stimulus payments to most Americans. Democrats and some Republicans approved a measure that would replace the $600 payments in the new virus relief bill with $2,000 checks. It's a proposal that's backed by President Trump. Many Senate Republicans previously opposed payments larger than $600. French fashion designer Pierre Cardin has died. Cardin was a visionary who dressed both the famous and the masses. He wasn't just about clothes. Cardin also struck his brand on a wide range of products, everything from bath towels to fragrances. His career lasted more than 3/4 of a century. Pierre Cardin was 98 years old. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport industry buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
What we want to do is take a consumer-first approach. We really want the consumer to guide us on how they want to see content. Right now, they're telling us that they really want to see more and more content on Disney Plus and Hulu.
That was Bob Chapek, Walt Disney Company CEO, speaking to us back in October. Of course, Disney Plus is one of the businesses that has really, I don't know if I could say cashed in on the pandemic. That sounds bad. But they've done well during the pandemic because people are staying home, because people are locked in, and
Winners
there's
and
little else to
losers.
do besides watch content.
Winners and losers. I agree. It's like a little uncomfortable to say it, but man, they have, as you said, really benefit. Netflix, the same thing, right? Everybody is just watching everything and anything on streaming.
Yeah, absolutely. And don't forget Amazon and Hulu. And there's so many different channels that I'm waiting for one package that wraps them all together. Like, remember when we were kids, you could get cable? There was this cable thing, right? And you would get it and it had all the channels on it. That's what I want now.
Well, we're rebundling. It's just streaming. All right, let's get to our reporter, Ryan Vlastelica of Bloomberg News, watching what's going on when it comes to streaming this year. It is all about content. We heard it from Bob Chapek of Disney. Ryan, I watched Wonder Woman with my daughter. Seems like a lot of other people did too. Big screen going to streaming. I do wonder if we are at a tipping point, kind of a pivotal change when it comes to
Hang on, you watched at home or in the movie theater?
No, at home, safely with my own popcorn.
Oh, okay.
So I do wonder, Ryan, are things going to change dramatically? Are things going to stay this way where we're going to see things going straight to streaming post-pandemic?
Good morning. That's a great question. It's obvious that streaming is here to stay, and we're going to see a lot of content go directly there. We might see more hybrid models like we saw recently announced with HBO Max. Major titles like Wonder Woman 1984 debuting on streaming platforms and in theaters on the same day. This is actually a really important test case of Wonder Woman 1984. It did quite well in theaters over this past week and made about $17 million, which was above the high end of expectations here. Shows that there are a lot of people who still want to go out, want to go to a theater and see a movie. You know, this number is especially impressive considering that you have major markets like LA and New York. They're still closed, and the theaters that are still open, they have seating restrictions. So there is a lot of pent-up demand to see this, even if there is an option that you can watch it at home essentially for free with your monthly subscription. So it's very likely that as the vaccine gets rolled out, as theaters reopen, as all these major movies that were delayed from 2020 start opening next year, it's likely that we'll see a lot of people who just want to get back into the theaters, even if there are at-home options.
Right.
So and I have to agree, going to a movie theater is a fantastic experience. I haven't done it since, I think, February, but it's something I want to do again. Ryan, how is this changing the picture in terms of studios? I mean, the major studios in Hollywood, are they losing the clout that they had, and that's going to the Netflix, the Amazons, the Hulus? Are we seeing even movie industries in other countries that are starting to gain a stronger foothold? Because I believe Hollywood kind of got its power that way in the first place.
Yeah, absolutely. I mean, it's pretty clear that if you have these major players, Netflix being the most prominent example, you have a lot of major filmmakers who want to work with them, a lot of major actors. There's a lot of great distribution and promotional stuff going on there. You're not seeing that as much in the same way with some of these, traditional studios. There was a lot of controversy when, the HBO Max and things being put directly there. A lot of the filmmakers who were impacted by that, expressed some disappointment that their films weren't getting sort of an exclusive theatrical release. But, I do think that over the longer term, you're going to see these major films really focus on the theater because that's where you make the bulk of your money, even though Disney, for example, has put some titles on streaming first, like Seoul this past week, they have indicated that they're going to continue to do a sort of traditional distribution platform and roll things out in the theaters.
Yeah, I heard some of the folks on Bloomberg TV earlier talking out of Europe, talking about Seoul. I do wonder. Matt says, please, can you at least plug Midnight Sky by George Clooney? I watched it. What's interesting too, Ryan, is I think we saw it with Reese Witherspoon. Like, these are big movie stars who are embracing streaming in a big time. It's given it almost validity, and I do wonder, how we see even more of that going forward.
Yeah, absolutely. It's hard to think of many, A-list movie stars who haven't done something for streaming. Like right now, the only one who really comes to mind is Tom Cruise. I mean, we had Tom Hanks did a film for Apple TV Plus. Really down the line to mention George Clooney. Brad Pitt has done it. So just there's so much interest in streaming. There's a lot of money right now for content. A lot of filmmakers and actors have sort of the freedom to make, their dream projects. So right now, it's really a bonanza on streaming. You're not seeing that as much with the traditional model, which is more, focused on major franchises and so forth.
The other thing, I was kind of reading in and doing some research to ahead of talking to you, and the first ever NFL game to be shown exclusively on streaming platforms, that happened, I think it was Saturday night, between the 49ers and the Arizona Cardinals, had solid numbers. So, I do wonder, what is the real success story? Is it a combination of great content, which we've seen already? Is it also sports really kind of increasingly embracing the streaming space here, Ryan?
Yeah, absolutely. I know sports is one area within streaming that hasn't quite been achieved the same kind of success that other forms of content have been, just because there's a lot of live elements and so forth. It's not really an on-demand kind of thing that you want to, you can watch the George Clooney movie whenever you want, but you probably want to watch the game as soon as it happens, so you're not, getting spoiled on how it comes out. So this is an area that there's been a lot of interest in. Disney has ESPN, and they're trying to integrate it with Hulu and other packages. So this is going to be one area that's going to be worth watching going forward. Yeah, just real quickly, 30 seconds here. Who's going to be the big winner, you think, when it comes to 2021, when it comes to streaming? Is it all about Disney at this point? Disney and Netflix are just so big right now. I would probably say it's going to be so much focus on Disney. They have so many of these major titles and properties. They've recently announced all these new Star Wars-related shows, all these new Marvel shows. So, certainly if you are invested all in pop culture and these major titles right now, that's really where you have to be. Yeah, exactly. All right, good stuff. Ryan Vlastelica of Bloomberg News, who's been tracking the streaming space for us. Great stuff. Good stuff. Really appreciate it. All right, folks, just about 36 minutes away from the opening bell on this Tuesday. And we've been talking about, we've seen a lot of market support globally here. Once again, the enthusiasm over finally getting a Brexit deal, getting that second pandemic relief package, and just a reminder that global central banks will continue to do anything that they really need to really prop up economies, especially as we continue to see those virus cases continue to rise around the world. We continue to see shutdowns of the economy, even as the vaccine rollout happens. But again, as we heard from our John Larriman, it's not always so easy, and there are certainly difficulties when it comes to the logistics. You can see S&P 500 futures just up about 15 points, and also looking at that 10-year of that yield firming up just a little bit, up to 0.94. All right, coming up on the open on Bloomberg Television, Matt Brill. He is Invesco's senior portfolio manager and head of U.S. So we're going to talk about the markets there, as our own Matt Miller will count you down to the open on this Tuesday. We're going to also expect to hear from President-elect Joe Biden a little bit later on. He's got some thoughts about that vaccine rollout and those increases in those vaccine numbers. So we'll be tracking it all right here on Bloomberg. I'm going to go back over to surveillance on radio.
Chinese brands now account for 7 of the country's top 10 cosmetics lines, up from just 3 in 2017. That has pushed out foreign brands like L'Oreal's Maybelline, which has seen its share of China's makeup market plunge by half since 2010. For more, we're joined by Bloomberg editor Bruce Einhorn. Bruce, why the drop?
Chinese brands are becoming much more adept at reaching Chinese consumers, especially now at a time when more consumers are reluctant to go shopping outside. People are spending more time at home. People are spending more time on social media. Chinese brands are very good at using social media, using live streaming, using other things in order to market. Chinese brands also tend to be less expensive. And so at a time when the economy is struggling a bit, there's a lot of uncertainty, people are more budget conscious, Chinese brands have a bit more of an advantage.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Good morning. Good morning for our viewers worldwide. I'm Matt Miller, in for my brother from another mother, John Farrow. The Open starts now, or the countdown to, just 30 minutes to go. The big issue, stocks pointing to fresh records for another day. Headwinds, though, moving to the rear view mirror. It's no longer a concern. Maybe that in itself is a worry.
The fiscal aid is a good thing. It certainly is buoying markets.
The package overall has been passed.
If there is a risk, a positive risk for markets, it's actually overstimulation.
We've got a lot of questions already early in the calendar for next year. There's already signs that we may look for a second fiscal stimulus. These Georgia runoffs, what happens there?
The markets at the moment are sustained by the sentiment of investors that are very, very open to risk.
You see very little, if any, concern priced in via the equity market.
We have a new breed of investor that really is trading on sentiment and emotion.
I'm a little bit concerned of where we are in markets right now.
A lot of great news has been priced into the markets, that's for sure.
Senate Republicans now facing a dilemma in Washington after a vote by House Democrats to send $2,000 checks to most Americans, a move backed by President Trump. For more, let's bring in Bloomberg's Kevin Cirilli and Abigail Doolittle to talk about the markets. Kevin, we'll start with you. How difficult is this for Senate Republicans that have to either back President Trump or, in a lot of cases, go back on their words?
It's unknown whether or not Senate Majority Leader Mitch McConnell will, in fact, have a vote for the $2,000 stimulus checks. This, of course, having at a time in which unanimous consent would be the procedural hurdle that this measure would have to clear. It would require 2/3 of a majority in the Senate because of its ability to be fast-tracked, as it's called in the nation's capital. Again, some procedural dynamics at play here. In contrast to that, what you saw yesterday in the Democratic-controlled House of Representatives were centrist Republicans, many of them representing more suburban districts around the country, backing the $2,000 stimulus check measure. I spoke yesterday with Congressman Fred Upton. He is a Republican from Michigan. Michigan. And what he told me was that he believes that this $2,000 stimulus check, it would help families that have been pummeled as a result of the pandemic on a host of different ways, not just and including the virtual learning additional headaches that have placed on millions of American families, but also on baby boomers who have had to step up in terms of providing childcare for other generations. So there's a host of different accounts that are being taken into for each lawmaker. But the final point that I would make here is that this is, as you somewhat alluded to, a marker of an issue to set up the next political cycle between now and 2024. As we hear from increasing amounts of Republicans talking about the $27 trillion debt, President Trump laid down a marker of sorts on populism by saying that additional funds are needed for middle class and lower middle class families right now in the midst of the pandemic.
Yeah, and you'll probably hear a lot of a lot of candidates out there touting these $2,000 checks. I'll remind everybody, though, that even George Washington, bought you beer and wine before you went to the polls. Kevin, I wonder what the other big issue that President Trump made a big deal about was the social media protections. He wanted protections stripped from big social media companies for things that their users posted. Is that just going in the corner to die if they veto or if they overturn his veto on the defense bill?
Absolutely not. And in fact, many of the Republicans who are coming out to support the overriding of the veto, which based upon my reporting, I fully anticipate will be seen across the finish line in the less than 48 hours. But many of the Republicans, like Senators Marsha Blackburn, like Senator Tom Cotton, they have all come out and said that Section 230 of the Communications Decency Act needs to be dramatically overhauled, that there needs to be a new type of conversation pertaining to big tech regulations. I contrast that, based upon my reporting, with how Democrats have argued that more regulation is needed for big tech companies in terms of breaking them up. Chairman Cicilline comes to mind in terms of his antitrust investigations. All of this comes at a time in which the Department of Justice, as well as state officials, have been looking at big tech companies and, of course, have brought in various lawsuits across the country for pertaining to them as well. So no one is saying that there doesn't need to be a structural change on big tech. It's just a matter of how they plan to do so.
Gotcha. And, of course, who gets credit for it? Kevin, thanks so much for joining us. Kevin Cirilli there from Washington, D.C. For more of the market action, a lot of it driven by the stimulus out of Washington. Let's go to Bloomberg's Abigail Doolittle in New York. Abigail?
Hi there, Matt. Well, it's interesting because these $2,000 stimulus checks, the possibility that they could come into play because, of course, as you and Kevin were just talking about, the Democrats siding with President Trump. However, we still have to see whether the Senate will vote on it or will pass it. And it seems as though they are likely to block it. So I think that what we have going on here is more seasonal tailwinds. This is typically the time of the Santa Claus rally. We have had the S&P 500 up several days in a row, plus just the idea that there is support, whether it's $600 or $2,000, the American economy is supported. So with this, we have these synchronized all-time highs for the major averages. It's really pretty incredible. Let's not forget, we had a brief bear market earlier this year when the Russell 2000 actually was down more than 40%. Out of those March lows, though, more than a double, up 109%. That's the kind of recovery that we're seeing because not just the support, the fiscal support, but of course the monetary support that we'll be taking a look at in a moment. And this really goes against the grain of this pandemic year. You would think that stocks would be falling, but that is simply not been the case, especially for some of the big cap stay-at-home stocks, most momentum stocks. Tesla up nearly 700%, Moderna, Peloton, Zoom, all up more than 400%. And Matt, it really has to do with the Fed, as so many people are expecting, because if we take a look at the Fed's balance sheet, it has absolutely ballooned to, I believe, above $7 trillion. One of my favorite charts in the Bloomberg terminal shows the money supply and the S&P 500. Earlier this year, there was a big divergence as the money supply was going higher. The S&P 500 went this way. They've both converged. So here we go. Something to keep in mind, though, the Russell 2000 actually retreated from its all-time high yesterday. So some interesting divergences also to keep an eye on against all of this exciting background, Matt.
Yeah, but Tesla up 700%. I love it, Abigail Doolittle. The price-earnings ratio, 1,051 on Tesla shares right now. Let's bring in BTIG's Julian Emmanuel. we expect the rally to continue into next year. Julian, you're writing, quote, we see the S&P 500 at 4,000 at the end of 2021, despite the market being very overextended in the near term. Earnings growth is coming, financials are set to lead, and the history of years like 2020 tend to be followed by higher prices in the subsequent year. How can these kind of PE ratios, certainly nothing else is like Tesla, but we're looking at 30 on the S&P, continue for another 12 months?
Well, you really do need a confluence of things to go right. And essentially, the way the setup is, the base case is that the majority of these things will go right. Obviously, the public inflows, particularly in the options market, have been a very strong determinant of prices, certainly in the second half of this year. The public bullishness is a near-term concern, but in essence, when you think about it from a longer-term perspective, the fact that there's enough cash on the sidelines, the fact that a new generation of investors has come into the market and has actually shown a tolerance for pain, which is surprising, I think surprising to all of us professionals, really bodes well in this environment of negative real yields for further gains next year.
So does every family then take these stimulus checks, buy 2 or 3 Teslas, and then drive from Airbnb to Airbnb for the entirety of 2021? I mean, are you counting on, are investors counting on all the liquidity being pumped into the market that to be spent immediately by consumers?
No, and actually, if you saw, an incredible burst of spending, that's something that may actually take away from investment flows. So what we think is you're going to see gradual increase in spending as the economy reopens, certainly towards the second half of next year, as well as sustained inflows, perhaps on the order of what we saw after the last election in 2016, to guide stocks higher next year. But it isn't likely to be a burst. And frankly, if it were a burst that resulted in a further burst in the stock market, we'd probably get incrementally more cautious.
How much cash is on the sidelines then right now, Julian, and how much of it is going to come in via Robinhood?
Well, so if you look at money market funds, they have come off their highs, but the spike is incredible. And when you think about what the personal savings rate is, essentially in the teens, whereas over the last 10 to 15 years, that average was more like on the order of 5 to 7%. It really is quite dramatic. But again, much like what we saw in coming off of the lows in 2009, the cash is being used to supplement consumption in the present. And that's why, for us, part of this story of higher markets in 2021 is contingent on the distribution of the current stimulus and the market's expectation that you're going to get further stimulus above and beyond this $900 billion.
And so some of it, of course, is going to Bitcoin as well, Julian. I know you guys have a $50,000 price target for it at the end of 2021 as well. Julian Emanuel sticking with us. Kriti Gupta joining us now with a look at some of the stocks moving in the pre-market. Kriti, what do you see?
Well, Matt, of course, we're also seeing that defensive bid once again leading in the markets. A lot of this coming down to Apple. You can see those shares higher, poised to hit an intraday record. Of course, we saw it close at a record high just yesterday. Of course, shifting over to Alibaba as well. This is a company that's been dealing with a lot of antitrust scrutiny, of course, in China. So now they're coming out and saying, well, that Ant Group, that parent group, could actually be restructured to a holding company. So good news for the likes of Alibaba and, of course, other ADRs like JD, for example. Switching over to Nikola, that EV space getting another bid. An analyst over at JP Morgan saying it will see a less drama-filled 2021. Flip up the boards and look at the downside movers. You actually see vaccine makers taking a little bit of a hit as AstraZeneca could get approval over in the UK and, of course, nears a deal with Indonesia as well. That coming to the detriment of the likes of BioNTech, CureVac, and Moderna. Matt?
All right, Kriti, thanks very much. Kriti Gupta looking at some of the pre-market movers this morning. Coming up, a tumultuous 2020 is finally drawing to a close. Strategists taking their positions following an unprecedented year for global markets. That conversation coming up next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bitcoin is the reserve currency of the crypto asset ecosystem. So it is the reserve cryptocurrency, which is a very important role. It's the flight to safety currency. We are extremely bullish. Our confidence in it has gone up since 2017.
Big boss there, ARK founder Cathie Wood, laying out the bull case for Bitcoin, topping $28,000 for the first time ever on Sunday. In a year that will be remembered for a global pandemic, many records were broken, leaving investors wondering how to position heading into the new year. Bloomberg's Abigail Doolittle joining us with more. Abigail, what an insane year.
What an insane year. And those comments were really pretty stunning, Matt. The idea that Bitcoin is the digital cryptocurrency and a safe haven. I'm not sure that that's how a lot of the folks investing in it view. Some clearly do, but something that's up more than 2,000% in such a short period of time doesn't exactly trade or feel like a safe haven. But it's not just Bitcoin that's on a tear. As you're mentioning, stocks right across the board. Earlier, we were talking about U.S. stocks set for new all-time highs, synchronized all-time highs. Stimulus a piece of it, but it's global stocks too, Matt, as you know. So I think it really makes the case that the bigger tailwind, central bank support around the world, the NASDAQ 100 doing the best, up 47%, but you have the S&P 500, the DAX, the all-world index, all at record highs, all higher on the year after that brief bear market earlier this year. Now, another look at liquidity, of course, super low rates. That makes the liquidity and the funding situation cheaper. That certainly has helped stocks. It's going to be interesting to see if we do see the 10-year yield finally back up above 1%. Will we see a repricing of risk, and what level would it be? 1.25%, 1.5%? Unclear right now, but that's something to think about for 2021. And then finally, speaking of 2021, analysts are super bullish. Yesterday, Chris Murphy at Susquehanna on Options Insight told me he does expect the S&P 500 to rally with sharp pullbacks. That seems to be the consensus. The average average analyst expects the S&P 500 to end above 4,000. The low, though, still above where we are now at 3,800. So really pretty extraordinary. Not what you would expect coming out of a pandemic year. And of course, the pandemic stretching into 2021, unfortunately, Matt.
I hate to use the term FOMO, Abigail Doolittle, but, you know, older people like myself used to call it animal spirits. How much of a role is that playing in this risk rally?
I think it's probably everything, Matt, or my opinion is that it has a lot to do with it, certainly, and that's that liquidity, that cheap money being put into the system at the point that you have at first the safety stocks, the Apples being bid up earlier in the year, but as the year goes on, the Russell 2000 catching up in the second half of the year, then Bitcoin really taking off. So you have all this money in the system trying to find a home. That's certainly been happening in spades this year and pushing further out into the risk continuum as the year goes on. It's going to be interesting to see how it does play out in 2021. But again, street analysts are really pretty constructive.
All right, Abigail, thanks so much for joining us there on that. Abigail Doolittle on an outlook for 2021. Let's get Julian Emanuels from BTIG. He's still with us. And Julian, I'm pretty sure I read something from you, some research from you in the past couple of days about how much the sentiment, how much momentum has to do with this rally. How key is that, and how confident are you that it holds?
It's very important, as we were talking about earlier, Matt. The fact that you are basically at all-time record valuations in the S&P 500, by definition, makes it necessary that more things will need to go right in 2021, perhaps than in typical years. And sentiment is definitely one of them. Again, we've seen reasonably good inflows post the election. We've seen the options animal spirits continue to be very, very firm. The fact that you had virtually record call option trading the day before Thanksgiving is mind-boggling to us, but that is just typical of what we've seen in 2020. It doesn't necessarily need to go on at that breakneck pace, and frankly, we'd probably be a little more sanguine if the market marked time and the speculation calmed down for a bit, but that is a critical element in driving prices higher in 2021.
Where do you see yields, Julian? Are investors going to feel comfortable enough then this year to let go of the perceived safety of government debt and allow yields to float higher?
Well, we think that is part of the story, and really, again, part of the story driving equities and alternative assets as well. In a world where we know the Fed has said that they're not going to permit negative yields, certainly on the short end, and a world further where we do believe there's going to be greater stimulus. And, despite the protestations from certain people in Washington, the deficit is likely to rise even further. All of that point to higher long-end yields. Our year-end view is that the 10-year yield goes to 150. It does not necessarily need to be a disruptive event. What it likely will do within the context of a strengthening economy is cause this rotation that we've seen away from high multiple growth and towards value to accelerate in 2021.
You bring up a great point. A phrase I learned from Tom Keene about 20 years ago, financial repression. How much does that have to do with the rally in Bitcoin? I mean, how much is your $50,000 Bitcoin target predicated on what the central banks are doing throughout the next year?
Well, the flood of liquidity has certainly found its way into cryptocurrencies, into international markets, which we actually think outperform the U.S. Next year. It's all part of this combination of the globe going into the pandemic downturn together and exiting it. That process has already begun and we think accelerates in 2021 together. And that kind of globally synchronized growth has tended to cause a broadening of risk on rallies, whether it's, again, cryptocurrencies, international equities, and the source of funds has traditionally been, and we think it will be, coming from the fixed income markets.
Any reason to hold gold now?
Yeah, we think that gold continues to benefit from this view that inflation and inflation expectations are likely to move higher as liquidity remains very ample and as the global economy recovers. Higher inflation expectations is part and parcel of this recovery that we see, and really quite necessary when you think about the fact that confidence in general is still, very tenuous given where we are in the virus.
All right, Julian, great to get some time with you. Thanks so much for joining us. Julian Emanuel there from BTIG. Now, coming up, the analyst action you need to know about. That's next in our morning calls. Then later on, Teflon Tech leading the way this year with the rotation debate heating up. That conversation still ahead with Charles Lieberman of Advisors Capital Management. This is Bloomberg.
新型にはなんと2万点以上、全身でついてます。なので2万点あることにより、その情報が取れない、平面がないんですね。なので全てをスキャンすることができるので。どちらにせよ自分のサイズを1回最初から、適正なものを発見してそれを買って、家に届いてきたらぴったり非常にハッピーというのがやっぱりしかるべき姿かなと思ってます。
Valuations, particularly sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
I'm Matt Miller in for John Farrow. This is the countdown to the open. It's time now for our morning calls, a look at some of the analyst recommendations on Wall Street this morning. First up, Goldman Sachs raising its price target on Snap to a street high $70 a share. The analysts expecting growth to accelerate next year amid recent innovations and a favorable macro backdrop. Next, Raymond James raising its price target on Wells Fargo up to $35 a share with an outperform rating. The analyst noting the bank's progress on improving its ESG strategy. And then finally, B. Riley raising its IMAX price target to a street high $26. The analyst expecting the big screen theater company to benefit from the return of moviegoers with vaccines starting to roll out, as we've been talking about a lot. Coming up, some of the stay-at-home winners taking a hit as we wrap up 2020. That conversation up next with Charles Lieberman of Advisors Capital Management. This is Bloomberg.
give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We are 20 seconds away from the start of cash trading on Wall Street. Take a look at futures right now, pointing higher across the board. S&P and NASDAQ futures up about 0.5% after reaching all-time highs again yesterday. That's likely to repeat itself again today. There you hear the opening bell. Trade starts now at the NASDAQ, at the New York Stock Exchange, and on electronic exchanges across the country. No doubt the bullish risk-on mood will continue. We saw it, or we see it here in Europe, and we'll see it there in the U.S., at least at the open as well. You can also see Bitcoin continuing to ride. I put that in there, Bitcoin. I could have put really any currency other than the dollar, because the greenback falls and that boosts the euro, the pound, and even those coins in the currencies in the digital space, which a lot of people would consider simply commodities and not currencies at all. The 10-year yield continues to rise higher right now, 0.9481, so 95 basis points as investors let go of that protection. And NYMEX crude rising more than 1% to 48.19 a barrel. Let's head over to the markets desk. Bloomberg's Kriti Gupta joins us now with some of the stocks on the move in the very early trade. Kriti?
Well, good morning, Matt. That cyclical bid alive and well, kicking it off here under the hood with Boeing and American Airlines. The 737 MAX returning to the skies today, with American Airlines debuting their first flight in a long time with that plane from Miami to New York. Those shares really appreciating it, I should say. The travel sector bid ongoing with those cruise lines. Carnival up about 2%. It was up 2% in the pre-market, but 4% in London trading. So, of course, those cruise lines once again getting a bid. Looking at the Cheesecake Factory as kind of a proxy for other restaurants in line with that reopening trade, as well as those $2,000 stimulus checks. Really seeing those chain restaurants do well. Flip up the boards, and you'll also see that in line with that stimulus trade, you're also seeing Square benefit as well. For them, that first round of COVID relief checks coming out. The next round's coming out as soon as next week. And of course, Lemonade, one of the best performing listings of 2020, down 20% in the last 2 days, seeing a little bit of a bid now. Remember, the restrictions, those insider selling restrictions, end this week. About 44 million shares could be entering the system. And of course, Matt, wrapping it up with what we have to talk about, Apple hitting an intraday record right off the bat. This is a stock that, of course, hit a record close yesterday and is seeing quite heavy volume going into year end.
Yeah, absolutely. Kriti, thanks very much for that. You mentioned Apple hitting the record, also among the biggest contributors to the S&P 500 this year. Just one of the many tech stocks leading the way in 2020. But the consensus trade favoring a rotation in 2021.
I would say that value over growth in the U.S. in the long run, and also just beware of mega cap stocks. There's a huge difference in valuations between the top 10 stocks in the S&P 500 and everything else. I think as uncertainty diminishes, momentum trades will also diminish. I think it'll be more about valuations. And there are good values in markets. They're just not in large cap growth stocks or in long duration safe bonds.
Bloomberg's Abigail Doolittle joining us now with a little bit more on this. Abigail, the big rotation is one that people have been calling for a while, and no one's been right about it yet.
Well, Matt, I'm not sure that that's true, because we have seen a bit of a rotation, actually a big rotation, at least relative to small cap. 2020 will certainly go down as the stay-at-home trade, the big cap trades. Apple, as you mentioned, a new all-time high. Pete Diateris, who I'm sure you missed here in New York, he just sent out a note saying that Apple has added $1 trillion worth of market cap in 2020 alone. However, the Russell 2000 over the last several months is outpacing the S&P 500 by far and the NASDAQ 100. And in fact, out of the March lows, more than a double, the NASDAQ 100 up nearly 80%, if you can say merely. So I'm making the point here that the Russell 2000, some of these small cap and value names, they've already been doing pretty well. Now, of course, the driver for stocks of all sizes and shapes, that has to do with earnings. And we're finally starting to see the forward-looking earnings, EPS, number for both the S&P 500, the Russell 2000, and the mid-cap S&P 400 all returning to pre-pandemic levels. So that's certainly encouraging, because you can make the case that you have this just right everything rally where you do have the large cap hanging on, and then you have these small caps doing this big catch up in the second half of the year. However, we have seen a little bit of weakness over the last couple days. Lemonade strong on the day, but on Monday we saw some big weakness in Lemonade, Chewy, Moderna, Zoom Video, the hot stocks, the stay-at-home darlings this year, and you can see those massive gains. Pretty amazing, Matt. Really perhaps comes back to that liquidity that we were discussing before, that these companies that, yes, taking advantage of the stay-at-home trade, but of course valuation really obscene, but investors sort of holding their nose and buying away and doing quite well with it until Monday.
Can't fight the Fed, right? The central bank wants to push you out there, you're going to go. Abigail Doolittle, thanks very much for that. Chuck Lieberman of Advisors Capital Management joins us now, expecting a rotation out of growth, writing, quote, stocks that benefited the most from the COVID dynamic now have full valuations and should benefit less from the recovery. Others remain depressed, and much of their recovery still lies ahead. Chuck joins us, and this is kind of the rotation that I've been waiting for, Chuck. Out of growth into value. It's one that I think many have been calling and waiting for. Is it long overdue, or do you see it beginning?
Well, it really started a couple of months ago, and I expect it to continue. It's not that technology stocks are going to do poorly. Those companies are still in great shape. They're doing extremely well. We continue to move in the direction of technology. It's becoming more pervasive everywhere in the economy. But the stocks are fairly well priced, and the rest of the market is still quite depressed. 2020 was a year where the market was up 15% or more, but very little was up 15%. Technology was up 50%, 100%, 150%, and the airlines, hotels, those companies, not one of them is positive. They're all down sharply for the year. So there's great value there as the economy reopens with the vaccines, and that's where the value is most attractive.
Where do you expect the vaccines to work most efficiently? Where do you expect the rollout to work most efficiently? Where do you expect people to take them? Where do you expect the economy to bounce back fastest?
Well, they're obviously trying to roll out the vaccine as fast as possible. It's still a massive undertaking, so it'll take some time. But if their estimates are right, we could have 100 million people vaccinated by the middle of 2021. That would be an incredible achievement. In terms of where the economy bounces back, there are certain parts of the market that we think will participate relatively soon. For example, we like the financials. The banks are quite depressed. They're still extremely cheap. Wells Fargo and Citi both trade at discounts to book. There's a lot of upside there. Then you have insurance companies, which are very, very cheap. Lincoln Financial, Prudential, both very attractive companies trading at significant discounts to book. Again, tremendous upside potential. So there are a lot of places where the recovery should take place sooner. Then there are others where it'll take a little bit longer, but not a long period of time. For example, we'll go back to the office. That should be good for a company like SL Green.
Chuck, surely if you're counting on a rotation out of growth and into value, you got to look past Wall Street, across the Atlantic, and over here. I mean, the valuations that we're dealing with in Europe are nowhere near the likes of the NASDAQ.
That's right, but Europe also doesn't have as many technology companies, as many companies in the forefront of technology as we have in the U.S. There are no comparables in Europe for the Googles, the Microsofts, Amazon. So it's a different market. It's not to say that European companies aren't attractive. They are. They will participate in that economic recovery. In fact, one of the most important drivers that I see for the recovery is that it's going to be global in nature. Just as the shutdowns were global in nature and they were mutually reinforcing on the downside, with the vaccines, we're going to see a mutually reinforcing upside to economic growth around the world.
All right, Chuck, thanks very much for joining us. Chuck Lieberman there from Advisors Capital Management Company talking to us about his expectations for 2021. Let's head back over to the markets desk. Kriti Gupta joining us with another update on where we stand 10 minutes into the session. Kriti?
Well, Matt, of course, we're starting off with those home builders. Lennar, for example, getting quite the bid this morning. You saw Case-Shiller data actually say 20 city home prices are posting a beat, above their estimate, 7.95%, up on a yearly basis, the largest year-over-year gain since 2014. Also switching over to Alibaba, you are, of course, seeing those shares actually gain after taking quite a hit recently, simply on the idea that Jack Ma is actually coming up and saying that he's going to turn his company Ant into a holding company, a little bit limiting those gains, but still appeasing the Chinese regulation authorities. And of course, wrapping it up with some of the vaccine makers, Novavax and AstraZeneca. Novavax coming out, making progress on their phase 3 trial. AstraZeneca getting near approval in the UK, still waiting on submitting that application into the EU. Nevertheless, those stocks getting a bid to the detriment of some of those other vaccine makers, Moderna, Pfizer, BioNTech. Matt?
Kriti, what kind of volume are you seeing? I mean, I know during a holiday season, a lot of people tend to stay home, but we don't typically have the kind of retail participation that we have in a year like 2020. There's so many day traders at home, and even the industry players want to get in on that.
Well, of course, Matt, volume this holiday season has been so notably different. You have, of course, seen low volume, light liquidity. So it's essentially the institutional traders haven't really been participating, so you're not seeing the kind of massive bids that you would traditionally during a usual market session. But what you are seeing is a lot of headline stories, and that is enough to move the stocks, and it can only be assumed that the retail trade is behind this. So even though it's a low volume, light liquidity day from an institutional basis, those retail traders still at work here.
All right, Kriti Gupta there looking at the open for us. 10 minutes into the session, 11 minutes into the session, and another new record high. Coming up, a year like no other for credit markets, risky bets turning into winning wagers. That conversation next with Invesco's Matt Brill. This is Bloomberg.
We've seen great recovery in the markets. We have not yet seen that recovery in unemployment, things like that in the economy. So we'll see that through 2021 as the vaccine has an impact. But you really need to see that come into the system And I think that's going to be the driver of credit.
Blackstone's Dwight Scott, they're expecting a stronger economy to drive credit markets after the Fed's unprecedented pandemic response to support corporate debt markets triggered a surge in prices and deals. For more, let's bring in Bloomberg's Abigail Doolittle. Abby, we've seen a lot of MA Go action lately. Certainly the end of the year has been really playing catch up.
The end of the year has been playing catch up because the first half of the year for M&A was not so great. So the second half of the year, relative to credit, like so many other asset classes, Matt, it is a year for the record books, because who would guess that you would have corporate bond ETFs rallying about 30% on the year? Well, that, of course, is what happens when you put all this Fed liquidity into the picture. And you can see here in the Bloomberg terminal that HYG, which is high yield debt, and LQD corporate debt in yellow and blue, doing really quite well, in blue and white, doing really quite well after the Fed's balance sheet just absolutely ballooned, as shown there in yellow, going up to $7.4 trillion from $4 trillion. So really, again, coming back to that liquidity we've been talking about all morning. And as investors have been seeking yield, Matt, where have they been going? Well, to the junkiest of the junky, because corporate bonds on the year, not so bad for corporate credit, up 6.3%. But when you start to take a look at double B and B and triple C, take a look at that. Triple C, again, the junkie of the junkie, is up more than 20% on the year. Really pretty incredible. Works well when the liquidity is working well. Let's hope that there isn't any sort of a crisis, because if there is, you could really see air pockets there, Matt, where there won't be a bid for these bonds. And then finally, not surprisingly, companies and bankers doing what they do well, taking advantage of all of this liquidity. Record issuance in junk debt this year, Matt, more than $4 trillion. Really pretty incredible. Again, another record breaker for the books here relative to credit.
Yeah, absolutely. Hopefully we don't see that cascade of bankruptcies that Joe Stiglitz had been forecasting earlier in the year. Invesco's Matt Brill expecting spreads to grind even tighter as record investment grade inflows persist into the new year. He writes, quote, "There is no better large liquid market to invest in with positive yields." He joins us now, and let's talk first of all, Matt. I think it was during the last ECB meeting, I was messaging with Pharaoh, and I said, how come no one ever uses the term financial repression anymore? I feel like it was a lot more popular during the fiscal crisis. Do you see this happening in a very bold way now? The central bank's just pushing investors out the risk spectrum.
Yeah, good morning. That's exactly what they're doing. It's a domino effect, and essentially they're forcing you out of cash in the short term. If you're already in short term, you're going to intermediate, and if you're in intermediate, you're going out the curve. So the Federal Reserve is making it very punitive to be holding on to cash, and from that standpoint, it's making other buyers come in. We're seeing the inflows. And even this week, we've got basically a full desk staffed putting money to work for Japan, and it just doesn't stop. And we don't think it's going to stop in 2021.
So why does it continue to last that long? I mean, I remember back when we all learned the terms CDO and CLO, and every investor thought asset prices couldn't go down. Of course, that ended with a big bust. Is that how it ends this time?
Well, yeah, it certainly ended in tears back then. I don't think for the high-grade market it'll end in tears this time. You have a subsector of the high-yield market. We're actually quite favorable on triple Cs right now, but there will be some challenges around travel and leisure for sure. But one of the things about investment-grade credit that foreigners particularly like is that it is high quality. These are companies that they know. These are the Apples of the world, the Microsofts of the world. They're not going anywhere. They certainly have added a lot of debt in the past year, a lot of leverage in the past year. But they're going to be around. These are household names that can get them positive yields. And then they're so liquid to be able to invest in. So you can get into them. And if you were to change your mind in a few years that you think that the economy is worse or these companies aren't what you thought they were, you could get out of them. And I think that's one of the key things versus structured. When you were in the structured market back in 2007, you saw the signs. You couldn't get out of it even through 2008. So that's kind of the Roach Motel, and the investment grade market isn't that way.
Fair enough. So the high grade IG credit, I understand that kind of confidence there, but haven't investors already missed the boat?
We didn't miss the boat, but a lot of investors might have, sure. Back in March, it certainly became a very challenging time to invest. And, our indications, we were looking at, certain fundamental indicators that weren't as bad as people were saying. But at the end of the day, you needed the Fed to step in. And the confidence was there once the Fed stepped in. And so the Fed has actually only purchased about $14 billion worth of bonds in the corporate bonds. And that's about 0.2% of the market. So while the Fed has certainly supported the market through their words, they really didn't support the market through their purchases. And, when we think about buying investment grade credit, so it is about confidence. We know that the demand is there, but you just don't want to be the last one in. And so investors are certainly, worried as valuations have become more challenged and credit spreads have gone tighter. But there still is money that needs to be put to work. And so fundamentally, we actually think things get better in 2021. So that gives us a little bit more confidence, even without the Fed, as the Fed starts to pull away.
Matt, one of the things I've noticed, I've heard from people at MasterCard, we've heard it from Larry Summers, is that consumers are not only putting money away, you see savings rates rise, but also paying down debt. Do you see companies doing this as well, and what does that mean?
Yeah, we're seeing the exact same thing. And, people point out that leverage has picked up quite significantly for corporate market, but so has cash. And so corporations have added about $600 billion of cash this year. They have more cash than they've ever had in the history of corporate credit. So from that standpoint, the balance sheets are really distorted differently than they normally would. You don't have this imbalance of a lot of debt, but a lot of cash there. The reason why is the same reason that you have with consumers, that everyone's still worried that we could have another wave, we could have the economy shut down again. We just don't know when life will get back to normal. So let's hold on to a little extra cash. I like to call it a life insurance policy. As we go into 2021, I'm not upset that I had a life insurance policy for 2020. I don't feel like that was a waste of money. Corporations are the same way. Having cash on their balance sheet was a life insurance policy. They're more than happy to have spent that money to make sure that they got them through the worst of it and get them through on in 2021 when we think things are going to be a lot better.
All right, Matt, thanks very much for joining us. Really appreciate your input, especially on the high-quality IG, when, as Abigail pointed out, a lot of people are reaching out to the junkiest of the junk right now. You're a bit of a contrarian. Coming up, the market-moving events that you need to be watching. That's next. We bring it to you in our trading diary. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
When you get to the numbers that we're in right now, it really is very, very difficult to do effective identification, isolation, and contact tracing. In addition to the surge, we're going to have an increase superimposed upon that surge, which could make January even worse than December. We certainly are not at the numbers that we wanted to be at the end of December.
All right, so Dr. Anthony Fauci there delivering a message of pessimism, saying that January could be worse than December. He expects it to continue getting worse. It's time now for the Trading Diary, what you need to be watching this week. Vice President-elect Kamala Harris receiving the COVID-19 vaccine this morning. President-elect Joe Biden speaking at 3:45 p.m. And then a slew of U.S. data coming on Wednesday with wholesale inventories, or inventories, as they say it, funnily enough, in the UK, pending home sales and Chicago PMI numbers, plus the UK House of Commons voting on the Brexit deal. Someone during that vote is sure to say inventories in a silly way. On Thursday, we get a final read on jobless claims for the year. And then finally, global markets are closed on Friday for New Year's Day, and for all of us to recover from, well, I don't know, is everyone going to have a hangover this year? Because there's really not very much to do. We're even banned from lighting fireworks here in Berlin. And in Berlin, that is what you do while you're drinking on New Year's Eve. 26 minutes into the session, let's get a check on how equity markets are rallying right now. You do see the DAX turning back down after hitting a record high in Frankfurt. The FTSE is still up almost 2% at 66.20. The NASDAQ and the S&P both gaining, not going gangbusters, but the S&P touching another record, up 10 points to 37.45. This was the countdown to the open. This is Bloomberg TV.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has coming here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He says things of life happens. You know, I'm here by myself. So ¿dónde vive acá? En la parte de This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansati.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansati.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger.